Welcome to Rebank, your front row seat to the future of finance.
Will Peck is the head of digital assets at WisdomTree, a $130 billion asset manager and one of the first companies to really build and scale ETFs. Now, Will is responsible for WisdomTree's transition to a digital assets world, one that in many ways parallels what we saw with ETFs in the early 2000s. In this conversation, we dive into the work that WisdomTree has done, building a suite of tokenized products, including money market funds, all the way to equity index products, and most recently, private credit. They've done it across a range of public blockchains and have a coherent vision for how the future of markets will look in a tokenized world. Please enjoy this conversation with Will Peck. Will Peck, welcome to Rebank.
Great to be here with you, Will.
Great to chat. I'm a big fan of everything you guys are working on at WisdomTree. Maybe the best place to start, I understand from your background that maybe you started in a strategy role at WisdomTree. Looks like you've been there over 10 years at this point. When did you guys first get turned on to the tokenization opportunity?
Yeah, it's a good story. I've been with WisdomTree. This will be 11 years for me this week, pretty much. So I've been at the company for a long time. I started at the firm. I started my career in investment banking and ended up getting staffed on WisdomTree as a client. And I remember going around with the CEO, John Steinberg, who's our same founder and CEO, still leading the company today, and the CFO at the time. And they were meeting with, they were pitching WisdomTree to a bunch of investors. And WisdomTree, for those who don't know, we're a $130 billion ETF sponsor. We're one of the kind of leading independent ETF sponsors as we think about it, where very early in the company's journey, John recognized that ETFs were going to be a superior kind of vehicle to mutual funds. And I tell that because it kind of really informs how we think about tokenization. So when I was on this roadshow, I just thought it was I became a believer in ETFs, became a believer that these were a better wrapper, a better structure, really a better technology for investors than mutual funds. And I very much appreciated that Jono was saying this to a bunch of mutual fund investors, trying to get them to buy the stock. And so that was, I guess 12, 13 years ago at this point. I joined the firm in a strategy role. That really ties into exactly how we got into tokenization, where maybe 6 years ago, people were talking about Bitcoin. There were some of these big private blockchain consortium initiatives going on. And Jono came to me and to, some other members on the team and asked, what could do to ETFs what ETFs did to mutual funds? Like, what could be this next wrapper, this next evolution in the investment experience? And pretty quickly, we came to something around blockchain. And that kind of morphed into this whole stablecoin tokenized world asset initiative that we're seeing for WisdomTree and the industry more broadly. So for us, it was really just a recognition that just like ETFs improved upon what mutual funds did, there could be improvements in the investment experience. And there were lots of elements and similarities to ETFs that we saw with tokenization that kind of led us to develop a strategy here and execute it.
Yeah, makes sense. I think you and WisdomTree must be one of the best firms to talk to at this stage in the development of the tokenized assets or real world assets journey, precisely because of that ETF heritage. Now, I think the firm was started in the mid 80s, but ultimately there was kind of a repositioning toward ETFs right at the beginning. And you guys really caught that wave and created it in an incredible way. I guess based on my understanding of what changed at that point in time, I guess there was a recognition that ETFs, unlike mutual funds, had specifically some tax advantages, whereas investors in mutual funds basically inherited capital gains taxes created by primarily sales of assets in the underlying portfolios anytime that other investors may have come in or out of the funds. ETFs didn't pass along those taxable gains in the same way, and therefore there was just kind of more tax efficiency in planning and structuring that you could do over time. And I guess also the ability to basically create ETF shares and unwrap them by authorized participants by basically, in a sense, depositing in-kind shares in the underlying to create the ETF unit, and then vice versa. think there are a lot of parallels with tokenization, where tokenization is likely to go.
Yeah, absolutely. I mean, I think the story of ETFs is fascinating generally. So, I mean, WisdomTree, as you noted, has been around kind of the corporate entity since the 80s. It originally was a financial media company, still led by John O. And he ultimately saw the writing on the wall with regard to print media and had just written a story about an ETF, the QQQs, the Qs. And, wrote the story, looked at it, and was like, wow, this is like a better mousetrap for investors, like a better way to access these technology stocks through this wrapper, one of the first ETFs. And that kind of was the thing that led him to reorient the business around proprietary indexes in the ETF structure and launch, a bunch of ETFs in the early 2000s, let's say. So that's, WisdomTree, how it got to it. I mean, ETFs are interesting in that the first ETF, the Spider, SPY, still around, kind of sat there for like years. No one was really using it. No one knew exactly what to do with it. And then you started seeing a few other ETFs get launched, and then a whole wave kind of developed out of BGI, Barclays Global Investors, which was bought by BlackRock in the financial crisis. It was probably a few $100 billion in the structure. Today, there's, north of $10 trillion in ETFs worldwide. They've taken in the vast majority of inflows into the space over the past 2 decades. And we like to point to four main reasons why that is. You often hear about transparency, liquidity, tax efficiency, and standardization. So just taking these each in turn. So transparency, mutual funds are not transparent vehicles. Like you don't actually know what you own when you own kind of one of these traditional mutual funds. Whereas ETFs brought forward this basic idea that we're going to disclose portfolio holdings every day. So you know exactly what you own at all moments in time. You need to do that because you've got market makers who are making markets against these as part of the creation, redemption, arbitrage mechanism. But the transparency of ETFs was one reason they've definitely done better than mutual funds. And you see that both on the active and the passive side, so active and index tracking. So transparency, liquidity. ETFs do intraday liquidity where you can buy and sell on the secondary market exchange throughout the day, which is different than how traditional mutual funds work. And it very much ties in with what you're seeing in tokenization, where instead of just trading within market hours or using T+1 settlement, you've got the technology to enable 24/7, 365 settlement, trading across, different assets. Transparency, liquidity, tax efficiency was the point that you made, which really has to do with the way the in-kind creation redemption mechanism work that allows you to get rid of low tax basis stocks that are comprising the portfolio, that allows you to pass off those gains and not have to go to shareholders. And then the last one that I really think makes sense to highlight is standardization. So this is just the basic idea, and we kind of take it for granted today, that you can access any asset class, any liquid asset class, anywhere in the world just through your brokerage account with no paperwork. So, in the past, you go back 20 years, you're like, hey, I want to buy like a Japanese mutual fund. You're going to like some mutual fund sponsor and you are doing paperwork, signing up directly with them versus like just the idea that, hey, I can just go into my brokerage account and I can buy an ETF, no new paperwork, anything that's giving me access to Japan or to US treasuries or to all sorts of vehicles that were just hard to access in this way. So that standardization, I think you can definitely apply to tokenization. It really expands with tokenization, where all you need is an Ethereum wallet and you can access any wrapped asset, any asset within that ERC20 wrapper anywhere in the world and hold it within that infrastructure. And there's a lot of power and benefits that come with that standardization. So that's one of the same trends that we saw with ETFs that I think you're actually seeing kind of in greater scale with tokenization.
Yeah. I think it's very interesting, the example that you gave about how some of the initial products didn't scale, didn't find product market fit very quickly, but then ultimately did. How do you quantify the benefits, those four benefits of ETFs versus mutual funds? And how do you quantify the sort of uplift that tokenized products potentially offer vis-a-vis, what are now traditional financial products?
Yeah. So I wasn't around then, but the stories have been told where people are saying, yeah, why do I need to trade intraday, right? Like, why do I need a little bit more tax efficiency? Like, that doesn't really matter. My clients don't really care about it. Like, I'd rather just keep putting them in these traditional mutual funds. And that turned out to be a loser's mentality because this was just not how like little by little, and kind of everyone wants a better investment experience. And then like the snowball picked up, and it was no longer convincing people like, hey, you should be doing ETFs instead of mutual funds. It was just like a fact of life, right? It was just a better investment experience. So that's kind of the way that happened and developed over time. So it's hard to say like, hey, it was like a trillion was due to this or a trillion due to that. It's more like as you add these things up, the little improvements here, little improvements there, some big improvements, right? Some expanded access, growth of brokerage accounts, that all kind of led to this idea of, wow, this is like a better way for me to access the type of investments that I want to access. Now,
Yeah.
if we translate to tokenization, I actually think that's where things get kind of interesting, because I'm often asked like, hey, why would I buy like an S&P 500 token versus like an S&P 500 ETF in my brokerage account? And the answer is like, well, you probably wouldn't do that. Like that's not actually the benefit, like that's not the user journey that I think at least we're trying to create here, where you're saying if somebody's got a US brokerage account, they're kind of well served by like a Schwab or an E-Trade. Buying an ETF is an incredibly easy, cheap experience. Like you're paying essentially nothing, essentially free trading for the 500 largest stocks in the US. I mean, 50 years ago, that would sound crazy that you could get all of this exposure for free. And so, like, I don't know that that's the use case versus saying, hey, you've got somebody who's made the decision that, like, I want to be on chain, right? Like, I want to hold value in stable coins. I'm doing things on chain that require on chain actions. I also want to be able to access kind of different investments still within the same infrastructure I have of being on chain. And that's where I think the initial user journey comes in for tokenized assets. So it's not like we're going out there and convincing people like, hey, you're well served in your brokerage account, you should actually be just moving over here to the wallets. We're going to people who have made the decision to be like, hey, I want to be on chain because I'm doing 24/7 365 money movements, or I'm transacting in crypto, or whatever it might be. And that universe also deserves good exposure, good access to investments as well.
Yeah. No, I think it's such a simple point, but a true and a powerful one, which is every incremental dollar in stablecoins is ultimately going to be an incremental dollar in tokenized investment products. There are actually a couple different ways that they can get there, potentially as reserves backing the stablecoins, but even in just kind of basic usage of the financial system, including what is increasingly the on-chain, real economy financial system. Dollars get parked somewhere. Either they're in transit. Maybe they're making a payment. Maybe they're kept as liquidity so they can make a payment shortly. But even then, they can be held in short term yield bearing investments, and then ultimately, value will be invested for a return as it's not used. So I think that totally makes sense. How do you? And I mean, this would be a great transition into discussion of your stablecoin and the way you're thinking about how these parts fit together. But just in terms of taking stock, say, of the state of the industry now, what are the biggest pain points that you and your clients currently experience? And when and how do you expect some of those to be smoothed out?
It's a great question. I completely agree with what you just said. Like every incremental dollar in stable coins is, an incremental kind of the target market for, tokenized real world, or it is a tokenized asset in its own sense, but like that's really the addressable market for a lot of these services. And, stable coins seem to be continuing to grow, right? I think they're north of 270 billion globally today, or right around there. I mean, you'd like that number to keep getting higher, and people are forecasting things being into the trillions, which would be quite exciting. I think right now, though, you're seeing a lot like simple stuff like, hey, I want to get in and out of a stablecoin quickly from fiat. Like that's still a process that just takes people a long time. And you're still finding these examples a long time, or they're getting certain frictions along that process where a lot of those transactions need to be intermediated by capital. And you're saying, hey, I've actually got some sort of capital posted here to facilitate these sort of instant withdrawals or subscriptions to this stablecoin. And that I think is kind of rate limiting for the industry ultimately. I think you need to do that today. And if you're finding ways that you can provide those services with cheaper capital, you're going to be able to see costs come down across the board. But that to me is one that I think is a pain point that people are seeing and feeling, where getting between these different assets that have some sort of off-chain component kind of necessarily have kind of greater costs than you might otherwise expect. I don't know if that resonates for you in terms of some of the stuff that you're
100%.
seeing, but to me, that seems like something that we're figuring out in terms of growing pains today because it's like once something's on chain and exists on chain and there's like a pool of it and liquidity on chain, that's when you can do a lot of this cool stuff. But when then you're needing to get to like, hey, got to create these things off chain and then moving stuff around in the banking or security system behind the scenes, that's what some of the challenges that I think a lot of us in the industry are feeling.
Yeah. And I mean, that's probably in a sense squarely where your stablecoin strategy leads, right? In simple terms, any on-chain to off-chain or off-chain to on-chain transaction is basically inheriting the traditional payment system, security settlement system timeframe. So I think when a hyper-optimized, maybe it's T+0. If you kind of come in the morning, then maybe by the end of the day, you can settle your transaction. But in most cases, it's longer than that. T+1, T+2, and then anytime there's a weekend or holiday involved, it just, time frames stretch out. So how do you think about ultimately solving for this? I get the sense you guys are working on a few different things in terms of how to bridge and bring efficiency there. Maybe you want to talk about them.
Yeah, I think no, it's a great segue. We kind of think about our stablecoin strategy as really like from rails to reserves, where we've got our own proprietary stablecoin ticker as being transitioned to USDW. So that's issued by WisdomTree, a chartered trust company here in the state of New York. I think about that as like the transaction layer within our tokenized kind of asset ecosystem. Then we've also got our own tokenized money market fund, WTGXX. The WisdomTree Government Money Market Digital Fund, which has been, it's currently the largest 40 Act money market fund. I think the second largest money market fund instrument tokenized globally. We've had a lot of success recently, and that's issued out of a 40 Act trust setup. That's really how all the ETFs and money market funds in the United States exist. So we think about that as the transaction layer and the yield layer of kind of this ecosystem. And we're really about serving a lot of the other stablecoin issuers in the market where they might want to get access to reserves that are yielding, Fed funds or close to that. And that's what our money market fund can provide, as well as doing stablecoin interoperability. So facilitating subscriptions, redemptions into the money market fund and WisdomTree's other tokenized assets via other stablecoins in the market. So currently we support this through USDC and PYUSD, and trying to create an ecosystem to serve stablecoin issuers and stablecoin users. We're not going to be the stablecoin that's going to be everything to everyone, but we're trying to use it to facilitate tokenized asset trading and investing amongst the products that we're bringing to market. And that's where some of that standardization of on-chain actions, but also off-chain accounts gives us some efficiencies and user experience benefits, being able to do things faster and cheaper for our clients by using the same set of rails. So we've got a bank account backing USDW or a money market fund backing USDW being WTGXX. Could that work well with kind of moving money across assets? And we definitely think it would. So I guess without going into too much details, that's the types of ideas of the things that we're going to be doing moving forward.
Yeah. Does the stablecoin help you with the subscription redemption flow into the money market fund?
Not actually really today. I mean, all the subscriptions and redemptions into the money market fund and the other funds we have are done in fiat today. So there's really a conversion process done at each point in time. So if you're coming to us and you're saying, hey, I want to subscribe with USDW via my WisdomTree Prime account into WTGXX, right now that's a kind of off-chain, converting, burning the token, moving that into fiat, investing the fiat into the fund today. But we're starting to see the kind of outlines of a plan by which that can be more of an on-chain action only, where you could do something like a swap effectively from USDW into WTGXX with all the actions happening on-chain. And you abstract away some of those off-chain actions to be handled by kind of institutionals like WisdomTree entities. Right now it is, and I think a lot of people feel it this way, is that the funds and securities world just deals with bank commercial money, right? So you're ultimately needing to move wires behind the scenes and stuff like that. And the more, going back to some things we've been talking about, the more of these things we can actually handle on chain and abstract away from that underlying thing, the underlying back office operations, kind of the greater user experience benefits we can bring forward to people.
Yeah. So when you talk about that, I guess, roadmap, bringing more kind of on-chain to on-chain functionality to your stablecoin and money market fund and other products in the future, how much of the, I guess, speed of the roadmap is determined by regulatory considerations versus technical considerations versus maybe just a sense of, hey, there are other things that we can be prioritizing or allocating our limited resources to, finite resources to?
Yeah, I'd describe it as there's the regulatory for sure. There's a kind of wisdom tree or tech forward technology. And then there's like the banking security system technology. And maybe those are like three different things, right? Where I'd say the regulatory is very much a component. That's why you're seeing all of these tokenized stock initiatives happen offshore, right? Because there's not like, just as an example, because even with like all of this energy and like the White House putting out like working group papers like saying crypto is amazing and tokenization is going to be amazing. Like stuff just naturally takes time here in the United States. You don't just get to say one day, like, boom, this is all going to be different. Like, I think a lot of the people in the regulatory bodies, are great civil servants who are taking this stuff seriously, trying to figure things out. But it naturally takes time, and Congress isn't just writing new legislation overnight that's saying like all this stuff can now happen. There's interpretations of existing rules, there's implementation of things, there's kind of a process by which stuff gets put forward. And then in the US, right, you either need to do something, get a no action letter, or you're seeking some sort of exemptive relief, or there's some sort of filing that you need to do. And that's where like the stuff kind of happens. So all that to say that, especially onshore in the US, this stuff, it's great that the environment's overall changing. It's very constructive. It still takes time for the regulation to kind of evolve to allow things to happen.
Mm-hmm.
So that's one component. I think technically, and this is what I think we've seen with a lot of people, there's a great ability to do things on chain or using kind of modern technical infrastructure, kind of underlying that to allow you to do things faster and better. Where I think the big technical challenges happen with like, you're still dealing with like the banking system at the end of the day, or the security system, which has not always been like the most modern tech stack or things like that, right? So there's naturally limitations in terms of how quickly money moves, and kind of going back to the first thing that we talked about, what are some of the pain points? Like that's where you're seeing that. And you see that from all crypto providers in the space, that when there's like a little bit of friction or some capital needed to intermediate something, like a lot of that arises from like the back end banking system. So I think that's going to be a continued thing that will evolve. And I know a lot of banks and, true like financial market infrastructure providers are working to make those systems, underlying systems, work faster and kind of more at the speed of crypto. But that will also take time as well.
Yeah. So I imagine that part of your strategy role, in addition to implementing this path forward with respect to tokenization of existing products, and now I guess not the creation of the stablecoin because it already exists, but the maybe enhancement or repurposing. In addition to all that, you're probably looking forward even further, to see how this industry will likely evolve. WisdomTree has a very strong brand. The 40 Act fund means that these products that you're talking about are retail accessible. It's not purely limited to like qualified purchasers or accredited investors. Stablecoins are great retail products for many purposes. What's the potential future in which WisdomTree just offers a more kind of consumer focused banking or financial app experience? In a sense, you'd have the stablecoin as a checking account equivalent. You'd have a savings instrument in the tokenized money market fund. You'd have a range of investment products. You'd have SIPC protection as opposed to FDIC, which might give you even more depending on how your investments are held. You have a strong brand. You have the cost efficiency of running this on chain versus on traditional rails. Is there a future?
No, that's a great case for a lot of what we're doing.
Yeah.
I'd say so. We've got two platforms by which clients access our exposures, our products, our assets today. WisdomTree Prime is for U.S. retail investors, and WisdomTree Connect is for global businesses. So WisdomTree Prime is a lot of what you described, where it's a mobile app. You can download it from the app stores on either Google or iOS. And, you fund your account. That value is then held in stable coins. We accept subscriptions or, funding via both like ACH, so from your bank, also via stablecoin. So you can fund your account with USDC or PYUSD. And then you can then use those assets to, those dollars to invest in WisdomTree's tokenized funds and assets. We also allow you to withdraw those funds and assets kind of into your own wallet infrastructure. So if you prefer to hold all your money in MetaMask, you can sign up with WisdomTree Prime, buy $10,000 worth of money market fund or our US 500 fund, SPXUX, and then transfer that into MetaMask. So we've been just rolling this feature out now. It's kind of in early access mode for people who want to sign up and try it out. And that's something we're really excited about. And I think you can see going forward how getting back to this point of like, what are the benefits of, standards is that whether you're the largest institution in the world or you're just a, day-to-day, retail person, if you're operating with like an Ethereum wallet or an L2 wallet, you should be able to access kind of all of these exposures, transfer them, and get the utility that you want out of them in a way that you control much more without kind of these like walled gardens around which traditional financial services has been built. So I think going forward, that's how we see the future, giving people more control over their money, being able to earn yield more constantly, being able to invest in what they want to invest, hold it where they want to hold it. That's the direction of travel that we see and what we're trying to serve for people.
Amazing. Amazing. Well, Will, listen, a real pleasure to chat with you. You guys are not only visionary, have been for I guess a couple generations now in financial markets, but you're also great executors. So it's fun to watch your guys' journey.
Will, I appreciate the time. Thank you very much for having me. I enjoyed being here.
Great. Will Peck, thank you very much for joining us today.